I am John Howard, and in today's short video, I am going to talk about how 31% of young wealthy Americans, young wealthy millionaires aged 21 to 43, believe that real estate is the greatest growth opportunity as an investment. Again, 31% of this group. I'm going to start this video off with a quote. I still believe that buying a home is the best investment any individual can make. And that's from John Paulson, who's a billionaire investor. In case you don't know John Paulson, he actually made his money and his billions in the subprime mortgage crisis and betting against it. And actually now I've done a little bit of research, and John Paulson is very much pro gold. So he's all about, investing a lot in gold because of its potential going up. Okay, so a recent Bank of America survey featured in MoneyWise and Yahoo Finance, again, a lot of this content is pulled from Yahoo Finance, shows that 31% of affluent Americans aged 21 to 43 with at least $3 million in assets viewed real estate as the top growth opportunity today. Notably, only 25% of their portfolios are in stocks, compared to 55% for wealthy investors over the age of 43. More than 72% of these investors, 21 to 43, believe it is no longer possible to achieve above average investment returns by investing solely in traditional stocks and bonds. Stock market volatility is fueling this preference shift for these young millionaires. Persistent inflation, fluctuating interest rates, and geopolitical risks have affected confidence in traditional stock markets. Younger, high net worth individuals are turning to real estate for its tangible value and hedge against uncertainty, prioritizing this asset class because of its stability and long-term assurance. Real estate offers unique advantages that resonate with these younger investors. I've said these 5 benefits quite a bit, but I'm going to say them again. Appreciation, long-term value growth, cash flow, steady rental income, inflation, protection, rents often rise with costs, forced savings, which is basically loan amortization builds equity, and then leverage, controlling a large asset with a mortgage plus the ability or the future ability to borrow against it so as to acquire more property. This group feels that real estate provides qualities that are uniquely valuable in today's turbulent markets. Modern platforms have made real estate more accessible than ever. These are, like for an investor that actually, wants to buy real estate and not own it directly. These are REITs, fractional investments, and private syndications allow investors to tap into premium assets such as office spaces, retail centers, multifamily units, and potentially, I'm going to say potentially most notably, the $35 trillion home equity category. This is done, according to my research, the largest group out there is called Home Shares. Home Shares recently acquired City Funds. I did a little research on City Funds, and apparently they were acquired. But with City Funds, they actually were guaranteeing a 7% minimum floor. One of my jobs, actually, I worked at Sun America here in Los Angeles, which is a very large investment and insurance firm, which was acquired by AIG, now known as AIG. And they actually came out with something called the Income Protector. We called it TIP. And it had a guaranteed floor of 6%. Even back then, this is a long time ago. This is over 20 years ago. It sold out like crazy. I was actually working as a wholesaler in the wirehouse division. And they basically sold it out. And the demand was so high for that 6% guaranteed income floor that they went back and looked at it and got worried, and they literally just shut it down. They shut it down, and at least when I was there, they never brought it back. I was there for a while, for 3 years, but they never brought it back. So the point here is that, you can invest in Home Shares or what was City Funds. The problem is that Home Shares, you have to be an accredited investor. But in any case, you can, invest in the $35 trillion home equity category, without direct ownership. And just to give you context, the total stock market value at the end of 2024, which was all-time highs, was $62 trillion. And then the actual value of the stock market during April of 25, which is when there's a, rather large decline in the stock market, was about 52 trillion, roughly. So millennials and Gen Z have been shaped, or I should say maybe partly shaped, by the 2008 financial crisis, by COVID-19 pandemic, and then also market volatility, causing them to valuable tangible asset with real world utility. Real estate's resilience and direct connection to life's necessities make it sensible for a priority in their portfolios, offering a lot more than just paper gains. Are they all in on real estate? No, they're not. The Bank of America survey showed that among these wealthy young millionaires, 45% of them own gold as a physical asset, and another 45% are interested in holding it. 29% of this group said cryptocurrency offers the greatest opportunities for growth, while only 7% of ages 43 plus agreed with the crypto growth idea. Rich young Americans allocated 15% of their portfolios to crypto compared to just 2% for age 43 plus. 25% of these young millionaire investors identified private equity as another great growth opportunity. So there you go. Those are some stats for you on the, what these young millionaires are investing in according to the Bank of America survey. So basically, I'm doing this because this 31% statistic means that young millionaires see real estate as an attractive asset with multiple benefits. Whether you're investing, you're advising, or you're building, real estate continues to be a central role in pretty much everyone's portfolio. So there you go, everybody. In case you can't see, I've been talking mostly about real estate lately, just, for context. I mean, I've actually done short and medium term furnished rentals for the last literally 2 decades. I've got a, kind of a small, not that small, but a reasonably sized, portfolio here in Southern California, probably worth about $3 million. And I've held on to it for many years. I did owned or managed about 5 different Airbnbs over this period. And this is also during a period when I launched and operated 4 different businesses that went up to 7 figures per year and beyond. So I'm definitely, one that can, has benefited from holding on to the real estate and can say that, it's, for the most part, it's pretty manageable to own and to hold on to and to rent, while doing, other things, right? So if you like this video or you like this kind of content, you can consider giving the video a like. You can also consider subscribing to the channel. If you are someone that is potentially interested in getting into real estate and you are interested in the short and medium term furnished rentals opportunity, I'm actually looking at some short-term premium rentals, which are not California, as we speak. But in any case, if you are interested in that, you're going to see some links in the video. I have something called the SMTR Launch Kit, super, very basic, just in the event if you want to speak with or work with somebody that might be a little bit further ahead of you. I've got some links in there. Again, it's a very basic product in there. And then also you'll see an email. You can email me if you have any questions. Also, if you know someone that is interested in getting to real estate investing and could benefit from this video or the SMTR Launch Kit, you can go ahead and forward them this video. Okay? Thank you, everybody, and have a great day.